The standard blueprint tells you to work 40 hours a week for 40 years. You put in the maximum effort, follow the path, and yet at the end of the month, you've barely moved the needle on your actual net worth. Then you look at the ultra-wealthy. They generate massive wealth in their sleep, completely disconnected from the actual hours they clock. The 1% operate by a set of competitive advantages that are never shared publicly. Every year you operate without these principles, the gap between you and the people inside the room gets wider. Following the traditional path prioritizes comfort over growth, keeping your income tethered to your labor. To break that tie, you need the execution systems that turn these secrets into income. The first divide is how you treat cash. For most people, parking money in a savings account is the peak of responsibility. For the wealthy, it is financial stagnation. The reason is inflation. It acts as a hidden, silent tax that eats the purchasing power of your money every single year. This chart tracks a $100,000 cash balance over a 10-year period. While the nominal dollar amount stays exactly the same, the actual purchasing power drops. Cumulative inflation ensures that holding cash for the long term is a losing position. The wealthy view cash as a melting ice cube. They move it out of savings and into assets that outpace the rate of currency debasement. The second divide is debt. Average consumers use bad debt, high-interest credit cards and auto loans to buy things that drop in value the moment they're purchased. The wealthy use good debt. They borrow at a fixed rate and use it exclusively to acquire income-producing assets. They're using the bank's money to multiply their own upside. Look at the math of real estate leverage. If you buy a property entirely with your own cash, your initial investment is massive, resulting in a baseline return of 7.1%. But look what happens when you use a 30% down payment. You control the exact same asset with much less of your own money, and your investment now returns 7.5%. This frees up the rest of your cash to buy more properties. Debt transforms from a trap into an accelerator, raising the ceiling on what your capital can achieve. Most people spend years chasing complex tech startups or viral trends that rely on constant attention. The wealthy acquire dull, normal businesses. They buy laundromats, self-storage facilities, and vending routes. These boring businesses follow 3 strict filters. Customers pay monthly by habit, the purchase decision is low drama, like a $2 snack, and the owner controls the underlying asset. Wealth compounds best where public attention is low. Predictable cash flow is the oxygen of a financial ecosystem, and routine services provide it better than innovation. The fatal flaw in average budgeting is spending on needs and wants first, and then trying to invest whatever is left. Usually, that's nothing. The top 1% flip the equation. They prioritize investment before consumption, using a model that ensures their future is funded first. This flowchart illustrates an automatic investment plan. The moment you get paid, 20% of your income is instantly routed to a wealth and investments bucket. Only then are the remaining funds allowed to trickle down to cover your needs and wants. Automating this removes human emotion. You bypass decision fatigue and take advantage of dollar-cost averaging, buying assets consistently regardless of whether the market is up or down. While standard budgeting tries to manage scarcity, automating your investments engineers inevitable wealth. A standard employee earns their paycheck, the government takes its tax cut, and the employee lives on what's left. Business owners and real estate investors operate under a different framework. They earn, spend on deductible expenses, and only pay taxes on the remainder. This is a high-value rental property. Assets like this offer massive non-cash deductions. Through property tax depreciation, you can report a loss on paper that lowers your taxes, even while the property puts monthly cash into your pocket. Tax strategy is financial intelligence. Mastering it separates those who simply earn a good income from those who build true generational wealth. True wealth generation happens when you stop trading time for a paycheck and start layering these systems together. By mastering leverage, boring businesses, and tax strategy, you move from being the laborer to being the architect of your own machine. You acquire cash flow, you automate the capital flow into new assets, and you defend it all from the quiet erosion of inflation and taxes. Stop passively consuming and start executing. Hit the like button, subscribe to Luxe Dollar, and begin building your system today.